The euro versus US dollar and the sterling versus US dollar heading to the downside. The dollar versus yen is also heading to the downside. There's a talk in the Washington Post that the Trump administration on Liberation Day will announce a near 20% tariff on all imports into the United States from foreign countries. That has the market a little scared. The stocks are lower. The gold is higher. Bitcoin is higher too. Anyway, I'll go through the three major currency pairs of euro versus US dollar, dollar versus yen, sterling versus US dollar from a tactical perspective to kickstart your trading day today. So let's get started. First off, let me give you a disclaimer with all the uncertainty from the Trump administration, especially in regards to these tariffs. We're seeing volatile up and down price action. It just goes with the flow, if you will. And sometimes that is messy with the tacticals. I'm not making an excuse. I'm just telling the facts here, and it's messy for anyone who looks at the market and tries to figure out which way this market's going to go, because there is a lot of uncertainty and a lot of things going on, a lot of balls in the air, which may suggest just pare back a little bit from your trading. Just a idea, but if you're having a difficult time, you're not the only one, because these types of markets tend to lead to ups and down swings, and that can be frustrating. Nevertheless, we still follow the technicals, because why? Because they give us a bias, they give us a clue, and they're a reflection of the market. The market is all the traders out there trading at any one time, on any one day, in a instrument. So we would take a look at the euro versus US dollar. For instance, we see the favorite measures of technical analysis, including the 100 and 200 day moving average, which tends to be followed a lot of times by markets. You get these break points, and you get trendy type moves when you see them. But as you can see, over the last three trading days, we've traded above and below the 100 and 200 hour moving averages. It's not really making much sense. So we trade to the above it, we trade below it, and we trade above it, and we trade back below it. And today's trading, we trade above it not once but twice. But we did try to find support against the 100-hour moving average right here, which is one of those little clues that you take. And so we did get this reactionary move to the upside, but when the price couldn't get above the high price from earlier in the day, the song changes, and the band and the dancers go from a swing to something a little slower in pace, and we rotate back to the downside. Just different song, and we get back below the 100, the 200 and 100 hour moving average this time. And this time we see the shift from buyers to sellers. You can see it right here, where the price fell below that level, came back up to it, and then rotated back to the downside. We are trading to new session lows as we start the New York session, or the U.S. session. And we're heading down toward this swing area between 1.07609 and 1.0776. If we get below that level, this is really the key area on the downside. Oftentimes, when you have a trend-like move like we did here, you want to see the price move below 38.2% retracement. Well, down here we didn't. We came right back down to that level, and we bounced off of that level. So it was just a plain vanilla correction in what was a trend move to the upside. Also, right down here is this green line. This green line represents a 200-day moving average. So if this selling continues, i.e., if we stay below the 100-hour moving average, then the path of least resistance could be down toward these retests of these lows here, 38.2 and 200-day moving average. Get below those levels, and opens the door for further downside momentum to the down in that direction, which would potentially take us back down toward the 50% retracement. That's the bearish case. If we start to move back above the 100-hour moving average, it's one of those times where it's like, damn, there it happened again. Or whoops, it did it again, as Britney Spears would say. And we start to rotate that back to the upside. So pay attention to those levels. Let's take a look at the dollar versus yen. And in this currency pair, simply, we've seen that volatility I was talking about. Sharp fall on Friday, continued in trading yesterday until we hit down to this swing area right here, found support buyers once and twice, and then rotated back to the upside. That move to the upside came up to the 100-hour moving average right up here, found willing sellers against that level, and rotated back to the downside. If I go to the 4-hour chart, just for giggles, here's that resistance against a 100-hour moving average. You go to the 4-hour chart and look at it. The price up here came up to the 200 bar moving average, came down, and then rotated to the upside right through here. We did break back above the trend line right here, but then rotated back to the downside and trade here today, which rotated back below the 200 bar moving average on the 4-hour chart. So going back to our hourly chart through here, you can see that the price fell below 200. Tried to get back above it, tried to get back above the broken trend line right here, couldn't do it, and then rotated to the downside. We're seeing further selling. We are down here at this swing area through here, which has its goods and bads. We did find a ceiling here, we found a ceiling here, we found a ceiling here. We broke through the ceiling and just tried to base right through here against that level. So resistance, support, break below it, another, try to use that as resistance right here. Break above it, break below it, finally base against it, and move to the upside. Over here in trading yesterday, we did trade below it with momentum, which took the price down to the low, and then kind of came back up toward it right here, rotated to the downside, and then base against it, moved higher. So there's something about this area between 149.11 and 149.20. So watch that level. If we break below it, we head down toward this level. On the top side, we could see buyers here. What you want to see, look for is just momentum. If we get maybe above this old low right here near, it looks like the 55 or 60ish type level up there, then that's more bullish for the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. And this currency pair is the epitome of up and down price action, where the price has done a lot of up and down trading. I got to review this swing area right here. It's looking a lot messy with all these moves up to the upside and downside. So kind of ignore that. But what I want you to pay attention to is, these sellers near the 200-hour moving average. They're giving us a clue that, they try above it, they can't. They try above it, they can't. And now we're seeing rotation to the downside. So the sellers are taking control. This is going to be the risk area right here. As long as the price remains below those levels, bias remains to the downside, and we can have the traders looking toward taking out the lows from yesterday, because that's just an obvious level that we need to get to and through. Let's say that's around the 70, in the 75ish to 80 type range. Get below that level when we start to look toward these swing level down through here, which had these different swing lows and swing lows right here, forming this floor before moving to the upside. Came down to the high of that level before moving to the upside. So this area right through here between 128.60 and 128.68 would be the next key target on the downside. So there you have a little education, a little look from a technical perspective at the three major currency pairs to kickstart your trading day. Good fortune to trading, because you need it in the volatile markets, news-driven markets. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.